I'm Sarah Borkson-Keto here in New York for REIT Week 2019, NAREIT's Investor Conference. I'm joined today by Dave Schulte, President and CEO of CorEnergy Infrastructure Trust. Welcome, Dave.
Thanks for having me.
CorEnergy is the first publicly listed REIT focused on energy infrastructure. What are some of the trends that you're watching in terms of pipelines, storage facilities, and offshore platforms?
Well, there have been a tremendous amount of growth in the need and demand for those kinds of infrastructure assets, primarily because of the growth in energy production in the United States. And our company is able to own all of those assets, storage facilities, pipelines, even offshore assets, as real property. And what we try to do is find upstream companies that have need to access those assets, but they don't have to own them on their own balance sheet. We follow M&A trends in the industry, so we're looking for companies that have evidence of the need to exploit opportunities, but they've got dedicated capital on their balance sheets that they don't have to have. So we can buy that and lease it back to them, reducing their cost of ownership of those assets and letting them improve their return on invested capital. And we find a lot of activity in the market right now, primarily because of the growth in the United States production.
And how have lower oil prices affected the company's decisions to buy and sell infrastructure assets?
Well, especially since 2014 to 2016, the volatility and reduction in oil prices has given a lot of companies, you might say, religion or discipline, trying to live within their own means. And that's been good and bad. It's bad in the sense that energy investors are uncomfortable with a lot of commodity price volatility. But it's good for us in that companies that need to be prepared to live in a lower oil price environment are more careful about what assets they have to own and what assets they're willing to let go of in order to continue to drill for oil or exploit their own opportunity set. That's where we think we can be a good solution for these companies, and we've spent quite a bit of time attending conferences and through intermediaries educating companies about the benefits of maintaining control of their assets through a lease, but letting us do the ownership part.
And looking to the end of 2019, what sorts of acquisitions have you got lined up or are you thinking of?
We've been actively cultivating relationships with people. We think negotiated transactions is best for us because both the infrastructure assets we own and the way we finance them really result in the establishment of a long-term relationship with the operator. So we look for and focus on negotiated transactions, and we feel really good about our opportunity set right now in the $50 to $250 million range, which, by the way, we could do from our line of credit without needing to raise any new equity. So that's our expectation for the remainder of the year. One or two transactions, $50 to $250 million in size.
Great. Thank you, Dave, so much.
Thanks for the opportunity to be here.
And for more on REIT Week 2019, be sure to visit REIT.com.